Binance faces regulatory crackdown from CFTC over U.S. regulatory violations. Are you invested in cryptocurrency? If so, you may want to pay attention to the latest news surrounding Binance, the world's largest crypto exchange. The Commodity Futures Trading Commission, CFTC, has filed a complaint against Binance, its CEO Changpeng Zhao, and former Chief Compliance Officer Samuel Lim, alleging that the exchange actively solicited U.S. users and violated American derivatives rules. This could potentially upend the exchange's operations and have far-reaching consequences for the cryptocurrency industry as a whole. In this article, we will explore the allegations made by the CFTC and how they could impact Binance's VIP program and compliance controls. The regulator has accused Binance of purposefully obscuring the location of its subsidiaries to avoid detection by regulators and giving VIPs special privileges when law enforcement agencies pursued them or froze their assets. These are serious allegations that could have significant implications for Binance's business model. As the cryptocurrency industry continues to evolve, it is important for exchanges to comply with regulatory requirements and implement robust compliance controls to prevent money laundering and terrorism financing. The CFTC's enforcement action against Binance sends a strong message to other cryptocurrency exchanges that they need to take their regulatory obligations seriously. Stay tuned as we dive deeper into this issue and explore the potential impact on the cryptocurrency industry. Chapter 1. The CFTC alleges violations of U.S. derivatives rules. The cryptocurrency exchange Binance has been facing a lot of heat recently as the Commodity Futures Trading Commission, CFTC, has alleged that the exchange violated U.S. derivatives rules. The CFTC has accused Binance of soliciting U.S. users for millions in revenue, which could potentially lead to an existential threat to the exchange. The regulator has stated that Binance, along with its CEO Changpeng Zhao and its former executive Yi He, violated 8 core provisions of the Commodity Exchange Act, including laws that require controls designed to prevent and detect money laundering and terrorism financing. The CFTC has alleged that Binance purposefully obscured the location of its subsidiaries to avoid detection by regulators. This was part of a larger strategy that Zhao claimed was an effort to keep countries clean, according to the regulator's filing. Binance's alleged violation of U.S. derivatives rules is a serious matter and could have far-reaching consequences for the exchange. The CFTC's allegations against Binance are a wake-up call for the cryptocurrency industry. It highlights the need for exchanges to comply with regulatory requirements and implement robust compliance controls to prevent money laundering and terrorism financing. The CFTC's enforcement action against Binance sends a strong message to other cryptocurrency exchanges that they need to take their regulatory obligations seriously. In the next chapter, we will explore Binance's VIP program and compliance controls. The CFTC's filing alleges that Binance's VIP program played a key role in the exchange's efforts to generate fees and solicit U.S. users. The regulator has accused Binance of giving VIPs special privileges when law enforcement agencies pursued them or froze their assets. This is a serious allegation and could have significant implications for Binance's business model. Stay tuned as we delve deeper into this issue and explore the implications for the cryptocurrency industry as a whole. Chapter 2. Binance's VIP program and compliance controls. We have come across several stories in the cryptocurrency industry. One of the most recent and controversial stories involves Binance, the world's largest cryptocurrency exchange by trading volume. The U.S. Commodity Futures Trading Commission, CFTC, filed a complaint against Binance alleging that the exchange had violated U.S. laws by allowing U.S. residents to trade on its platform. The CFTC also accused Binance of engaging in illegal activities to generate fees and solicit U.S. users. A key part of the CFTC's complaint against Binance was the exchange's VIP program. The program was designed for high-net-worth individuals who traded large volumes of cryptocurrencies on the platform. According to the CFTC, Binance's VIPs were offered special privileges when law enforcement agencies pursued them or froze their assets. The CFTC alleged that Binance gave VIPs a heads-up or suggested they take their assets off the platform. This meant that Binance's VIPs were able to evade law enforcement agencies and continue trading on the platform without any consequences. Moreover, Binance's customer service and VIP representatives counseled users in mainland China on how to evade Binance's compliance systems. The use of virtual private networks, VPNs, and alternative non-state documents was advised by some volunteers and employees to mainland Chinese traders. This activity was illegal as it violated Binance's compliance controls and U.S. laws. The CFTC filing alleges that Binance engaged in similar activity for its U.S. users. The allegations against Binance's VIP program and compliance controls are serious and could have far-reaching consequences for the exchange. Binance has denied the allegations and has stated that it cooperated with international and U.S. law enforcement queries. The exchange has also frozen $160 million at the direction of law enforcement year to date. However, the CFTC's complaint raises questions about Binance's compliance controls and whether the exchange is doing enough to prevent illegal activities on its platform. As a viewer, you might be wondering what will happen to Binance now that the CFTC has filed a complaint against it. Will the exchange be able to defend itself against the allegations, or will it face severe penalties? These are questions that will be answered in the next chapter of this story. In the next chapter, we will take a closer look at Binance's response to the CFTC complaint. We will explore the exchange's position on the allegations and whether it has taken any steps to address the issues raised by the CFTC. The story of Binance's alleged violations of U.S. laws is a developing one, and we will continue to follow it closely. Stay tuned for the next chapter, where we will delve deeper into this story and provide you with the latest updates. Chapter 3. Binance responds to the CFTC complaint. The cryptocurrency world was rocked by the news that the Commodity Futures Trading Commission, CFTC, had filed a complaint against Binance, accusing the world's largest crypto exchange of violating securities and commodities laws. The news sent shockwaves through the industry, as Binance has long been seen as a leader in the space, with a reputation for innovation and a commitment to compliance. Following the filing of the complaint, Binance CEO Changpeng Zhao, CZ, released a statement, in which he expressed his disappointment with the CFTC's allegations. According to CZ, the complaint did not offer a complete representation of the facts, and Binance had cooperated fully with international and U.S. law enforcement queries. He also pointed out that Binance had frozen $160 million at the direction of law enforcement year to date, demonstrating the exchange's commitment to compliance. We have made significant investments over the past 2 years to ensure we do not have U.S. users active on our platform, a Binance spokesperson said in a statement. The complaint is unexpected and disappointing, and we will work to address any concerns the CFTC may have. Earlier in the day, CZ had posted a tweet that simply said, "for," which many interpreted as a response to the CFTC filing. The tweet was quickly deleted, but not before it had been widely shared on social media. The CFTC's complaint against Binance, Zhao, and Lim has the potential to upend the exchange's operations, and could be the first salvo in a regulatory crackdown on the world's largest crypto exchange. If U.S. regulators seek to shut down Binance for violating securities and commodities laws, there's little reason to expect the same accusations wouldn't be leveled at their smaller competitors for conducting the same types of activity. The news of the CFTC's complaint against Binance has sent shockwaves through the cryptocurrency industry, with many wondering what the future holds for the exchange and the wider market. Some experts have suggested that the regulatory crackdown could lead to a wave of consolidation in the industry, as smaller players struggle to compete with the larger, more established exchanges. As the crypto world waits to see how the situation will unfold, one thing is clear: the regulatory landscape is changing, and companies that fail to adapt could find themselves left behind. With regulators cracking down on crypto exchanges, investors are likely to become more cautious, and the demand for safe, compliant platforms is likely to increase. Outro. As the world of cryptocurrency continues to grow and evolve, so too does the scrutiny and regulation surrounding it. The recent complaint filed against Binance, Zhao, and Lim by the CFTC has sent shockwaves throughout the industry, and many are left wondering what the future holds for the world's largest crypto exchange. While Binance has denied any wrongdoing, the allegations are serious and could have far-reaching implications. If U.S. regulators do seek to shut down the exchange, it could have a ripple effect throughout the industry, with smaller competitors potentially facing similar accusations. For those who have invested in cryptocurrency, this news is cause for concern. The volatility of the market is already enough to keep investors on edge, and the threat of regulatory crackdowns only adds to the uncertainty. But for those who are willing to take a risk, there is still potential for significant gains. As the saying goes, no risk, no reward. And while the future of Binance may be uncertain, there are still plenty of other opportunities to invest in the world of cryptocurrency. Of course, investing in cryptocurrency is not for everyone. It requires a certain level of knowledge and understanding, and there are always risks involved. But for those who are willing to put in the time and effort to learn, the potential rewards can be significant. So, what's next for Binance and the world of cryptocurrency? Only time will tell. But one thing is certain: the industry is constantly evolving, and those who are able to adapt and stay ahead of the curve will be the ones who come out on top. As we move forward, it's important to stay informed and educated about the world of cryptocurrency. Only by understanding the risks and rewards can we make informed decisions about our investments. So stay tuned, and keep an eye on the latest developments in this exciting and ever-changing industry. So, keep the conversation going by sharing your thoughts in the comments below, and don't forget to give this video a big thumbs up if you found it insightful. Be sure to subscribe and hit that notification bell for more in-depth explorations of our city's developments. Until next time, stay curious and stay connected.